All right, everyone. Welcome to Grant Accounting and 990s. We are excited to share information with you and hopefully answer your questions. Sharif is here as well to co-present. He's a wonderful CPA with the sheriff.com. And he's also available for technical assistance for anyone that would like to schedule time with him as part of the Tacoma Capacity Building Program. So I'm going to kick us off. My name is Angela, and I will be your navigator and also co-presenting with Sharif today.
Yeah, and as Angela mentioned, my name is Sharif Abdurrahman. My business is Sheriff, not to be confused with Sharif, my name. Basically, that's just have no affiliation with law enforcement or anything like that. It's just the fact that I'm not very creative when it comes to naming things. People often mispronounce my name as Sheriff, so I felt like, hey, let's just lean into that when it's time to go with a business name. But as Angela mentioned, I'm a certified public accountant in Washington State, and I've really specialized in working with nonprofit organizations, and so we're happy to be here today talking about grants and 990s and all the stuff that people love to talk about.
Hey, thank you, Sharif. And this is part of the Tacoma Capacity Building Project. So we've just got an intro slide here. We're supporting NCS and Tacoma Creates organizations, as well as non-funded nonprofits that are serving the city of Tacoma. So thank you for being here. All right, that's us. So if you see this slide, that means we're validated and we're the right presenters. So I'm Angela, and this is Sharif. We introduced ourselves a little bit earlier. We love to co-present and share knowledge, especially in the area of grant accounting and grant compliance, because it's one of the areas after getting the money that could trip you up as a nonprofit. And we want to make sure that we're sharing knowledge with you on how to make sure everything is in the best shape as possible, or to be a resource to you if you have questions. Okay, so we're doing two things today. We're talking about grant accounting in 990s, and Sharif, I think, provided this graphic to us at one previous presentation, and we love to continue it. So accounting is, not stressful at all, according to this wonderful 32-year-old gentleman here. But it does maybe increase some pressure if you're not doing the accounting or if you need resources. So just a chuckle here. All right, Sharif, you're going to be up next. I'm going to navigate if you want to take us through the slides.
All right. Introduction to grant accounting. So hopefully, I will do my best to not put you to sleep. I totally understand that, grant accounting, taxes, 990s, just saying those words are good, good ways for, folks that have insomnia to, to fix that problem. But I'll do my best to try to explain it in a manner that is helpful, that doesn't get too much into a bunch of accounting jargon and all that kind of stuff. So the first slide here is talking about an introduction to grant accounting. So first of all, like, why is there like grant accounting and I guess non-grant accounting, right? Or what is the difference between them? Or why are we specifying, grant accounting? And so, accounting obviously in general, the purpose of accounting and accounting records and accounting software and all those type of things, in general, right, is to give information to stakeholders. That might be, internal stakeholders within a company or an organization. How much money do we have coming in? How much money do we have going out? What are the sort of categories of, that money that's coming in and going out? Do we need to make adjustments? Do we have not enough coming in, too much going out? Those type of things internally. Externally, right? Accounting in general is giving information to the external stakeholders, right? We're in the nonprofit sector, so most commonly that's going to be, potential sources of funds, right? If people want to, donate to our organization, they want to provide grants or whatever, then there's certain information in general that they're going to, maybe want to see prior to making those type of decisions, right? And so that's sort of like general accounting, right? So generally speaking, we're doing that. And general accounting has, sort of rules that, that are out there so that we're all sort of, doing the same thing. We're able to make apples to apples comparisons, and what have you. But when we get into grant accounting, it's much more specific than this, right? So again, that's sort of like the big umbrella type of accounting. Grant accounting is now we're kind of, hiding under that umbrella to make sure that we're not getting in trouble from, the quote unquote rain or whatever that's out there. So like this slide mentions, right? Grant accounting, pardon me, is a specialized area focusing on managing funds from grants, ensuring compliance and maintaining transparency, right? And it includes all these different things that we'll talk about in a second. But when we think about that, right, we're just managing the funds like specifically from these grants, right? And so within our larger accounting structure, right, we're going to have this sort of like silo of, okay, we got this money from, whoever it was, right? Foundation A or government entity B or what have you. Okay, and so we have these funds and we've received them and there are certain rules under which we can spend them, and we're going to have to invoice maybe, and we might have to submit reports, and all these type of things or whatever. So how are we going to be able then to account just for this sort of silo of of funds or of information within like our larger accounting structure, right? Because that's not the only place that we're getting funds from. So we have to be able to make sure that we can track just that specific, those specific funds, the income and the expenses around those. Also, we have to ensure compliance, right? There's a lot more compliance that's necessary for grant funds, right? Because there's specific rules, right, under which, you're getting the funds, right? Like you can only use them for certain things. You can't just go willy-nilly and decide that you can use it on whatever it is that you want to do. And so part of the accounting structure is ensuring that those funds are in fact being used in compliance with the grant terms, the grant conditions as is indicated here, right? Whereas in general, right, when you're talking about general accounting or whatever, right? Okay, so you might have some type of expense and you go to your boss and say I need to be reimbursed, for example, for this expense. They may say fine, go ahead. It goes to accounting. They may kind of look at it and um pay you and we're done, right? There's not a lot of checking for specific compliance because the rules are much more broad, right? In general accounting, right? What you can spend the money on. Okay, but now with respect to the grant accounting, that is not the case. And so we're going to have like the organizational compliance is still again like the big umbrella thing, but a more specialized compliance is going to be necessary for the specifics of the grant. So we have to have a structure in place that's making sure that something isn't getting missed along the way, right? That the people that are doing the accounting and all those kind of things, like they understand what the terms of the grant are, what the conditions are, the money, what can and can't be spent. So when something comes to them, even if it's already been approved, but it's not within something that can actually be spent on the grant before they're spending the money that maybe they're not going to be able to get back because they spent it wrong, right? They should be able to know like, oh, wait a second, when I align this kind of expenditure with the grant terms, like it doesn't match. And so that's something that is very specific to grant accounting that's not occurring, generally speaking, with regular accounting too much. The accurate tracking and reporting of expenses, right? Like we have to make sure that, when we have accounting software, right? Like we're going to have a category, right? Whatever the category is, it's very broad. Okay, this is supplies, right? This is professional services, like whatever it is. But you're going to need to have some kind of memo, right? That's in there that's being a lot more specific as to what it is that this is for, right? How is this, in fact, how is this particular expense in alignment with, the grant, right? Okay, we have Costco and supplies. Okay, well, that's not going to be sufficient, right? Okay, fine. You went to Costco and you got supplies, but like, what specifically, from there is making this sort of like, in alignment with, with the grant, and so oftentimes in your software, there's memo fields, there's ways to attach, the receipts and all those kind of things to make sure that within our software, we have, all of the necessary information so that when we submit stuff to the, to the grantors or whatever, there's not like all this back and forth of them re-requesting information and stuff like that because they can't tell, that we are in fact, reporting the expenses in a way that's helping them. Obviously, there's budgeting and cost allocation, and grants are different, right? Sometimes you get the money up front, and that money has to last for a period of time. And so you have to make sure that you're budgeting it so that it's going to last over whatever the term of the grant is. There's also the other side of it where it's a reimbursable grant. You're going to have to spend all the money first. So you're going to have in your overall organizational budget, you're going to have the ability or the cash flow to be able to spend all that money up front and then, get it sort of like in arrears when you invoice. And then cost allocation. In particular, we're talking about things that, we'll use our building as an example, right? So we have, whatever building that we're renting and have utilities and all those type of things. So, I mean, if we're using the building for 10 different programs and the grant is only one of them, okay, well then only, 1/10 or 10% of the of the building funds or whatever can be allocated to that grant. That's one example. There's examples in payroll. There's a bunch of other examples, but that's just a simple one. And then, we have to have audit readiness, right? And when we hear the word audit, like we often think of like IRS audit or something like that, where someone is like coming in and they're looking for, mistakes. And audit in the accounting world is sort of somewhat different than that. It basically is just making sure that the information that you're providing, the financial reporting that you're providing, is accurate. And how does someone know that it's accurate? Well, they have to be able to look at all the underlying proof, of the different expenses that you have and stuff like that, and make sure that that's in fact matching with the numbers that you're providing. So that's sort of like the introduction, right? So again, overall accounting is like the big umbrella, and then grant accounting is going to be very specific to that kind of siloed, source of income. So when we're just talking about this slide or the introduction, is there anyone that has any questions about this before we move on?
And then I see Dax joined us too. Dax, do you want to say hi to the group and your name and the org you're with?
Yeah, can you hear me okay?
Yeah.
Yeah, I'm Dax Henry. I'm with Making a Difference Foundation, or Eloise's Cooking Pot. Oh, I think you're muted, Angela.
Do you have any questions you want us to think about as we go through this, or you can just ask as we go?
I don't. I'll just ask as I go.
Okay, thanks for joining us, Dax.
Thank you.
All right. Okay, Sharif, we're going to go into the next slide. Does that sound great?
Right. Let's do it. Yeah, so again, kind of following up on what we were talking about in the previous slide, right? Like why is it important, right? So it ensures that the funds are used as intended by the grantor, right? So obviously we've been given these funds as I indicated before, not to just spend on whatever it is that we want to spend them on, right? But specifically, based on the terms and conditions of the grant. And if we do not do that, then it is very well, one thing I mean, we may have to return money, right? There's there's the possibility, of that, or we may not get the money that we're expecting because we didn't, fulfill the conditions, terms and conditions of the grant. So that's one possibility. But then also, right, like if you want to get funds in the future, right, they want to look at, the fact that you have received funds in the past, you have you spent those funds in accordance with the terms and conditions of the grant, and that you sort of have a structure in place to be able to do that moving forward. So it's super important to build trust and credibility. A lot of organizations end up getting like similar funding year over year over year because they've built up that trust with the grantors, and they know that if they give the money to organization, A, that organization is going to spend the money in the manner in which they're telling you that they're going to spend it, and they're going to be able to show you all the documentation and prove that they did it. In addition, grant accounting is important because it does prevent financial mismanagement. It's very, I mean, it's common. I think we can probably go, Google, different examples of where, folks have gotten, grants and they've just used it to sort of line their own pockets, or whatever the case might be. Having a good grant accounting system prevents financial mismanagement. And how does it do that? Well, an accounting system is more than just software, right? It also includes policies and procedures, and making sure that those policies and procedures are written in a manner, that someone or that mitigates, the ability for someone to be able to mismanage, funds, or to take them, or whatnot. And so having those policies and procedures, internal control structures, making sure that you have enough systems that are in place to, again, mitigate, the mismanagement of those funds, whether that mismanagement is actual fraud or whatever, or whether it's just spending them all willy-nilly in places that are not, where they were intended to be spent. And then grant accounting also facilitates transparent and accurate reporting, right? Making sure that it's all very clear, to the grantors in particular, but also for internal stakeholders. Okay, we got these funds, they were meant to be spent on this, and this is in fact how we spent them on that. Next slide. Right. And so, like with everything else, right, in order to have effective grant accounting, right, you got to have the tools, right? Just like with everything else, if I want to put together my desk, right, there's going to be certain tools that I'm going to have in order to be able to put that desk together, right? And it's the same with grant accounting. So the first thing is having accounting software, right? And let me back up for a second, right? Because organizations, when they're small, when they start out, the most common way that people do accounting when they start out is one of two ways. Either they use a single bank account and they have like all the transactions within that bank account. And then at the end of the year, they'll just kind of look at all the transactions in the bank account and be like, okay, here's the money we got, here's the money we spent, we're good. Or they'll do that in conjunction with like an Excel spreadsheet, right? And they'll just have sort of, whether it's by month, whether it's by quarter, by year, whatever it is, they'll have all that information on, sort of an Excel spreadsheet. The problem with those is that one, they don't facilitate quick reporting. They're very prone to, human error because of the reconciliation of different, maybe different tabs in the file, maybe different cells within a particular worksheet or workbook or what have you, And so accounting software basically, holds your hand, right, to make sure that those kind of issues don't happen, right? The software itself is making sure that both sides of an accounting transaction are being done because it does one side in the background. It's making sure that there's reconciliations that are actually correct by having, those kind of features, within the software. It ensures that the reporting that's being run, is also accurate, as again it has that feature, within the software, and so it's sort of like, an all-in-one, um, place where you can go shopping for for grant accounting related stuff. Examples of the software that are on here: QuickBooks, SAP. I mean, there's all kinds of different software. And what's going to be best for your organization is really probably going to depend on the size of the organization. Most smaller to mid-size, nonprofits, are going to be able to use QuickBooks, and it's going to be the most cost effective and the most efficient, and it's going to require the least, expenditure in, like bookkeepers, right? Because it doesn't require someone to be, incredibly advanced in their accounting knowledge. It's built for, kind of entry level, folks that are doing accounting. SAP, or I don't know, there's a bunch of different ones, MIP, whatever. All these other ones are for sort of like larger, organizations, that may have. So for example, some organizations will have a C3 and a C4 within one organization, where they're having in essence two different corporations, and QuickBooks is not really, going to be sufficient in most cases for something like that. You're going to need a more robust software. But accounting software is like super, super, super important. Even if you're a small organization now, you're not always going to be a small organization. And as soon as you get grant funds, if you don't have this kind of software, in many cases, you're gonna be deficient with the terms of the grant because it's one of the things that they're going to require as part of the money that they're giving you. In addition, you need some kind of budget management tool, right? You need something to be able to manage sort of the budget, and we talked about the different types of grants. I mean, there's a lot of different types, but if you're getting you getting the money, again, up front, and you're gonna have, 12 months to spend that money, making sure that you have a tool that's managing sort of where you're at. Okay, this is where we're at after 3 months or 6 months or whatever it is. Having some type of compliance tracking systems, right? Making sure that you're in compliance with the terms and the conditions of the grant, right? There has to be some type of system that's in place, to make sure. I mean, like I gave the example of, the accounting person being sort of like the last step that like, okay, there's this expense that's been approved along the way. Okay, now I'm going to check to make sure that that's sort of in compliance with the grant all along the chain of approval, right? From the individual that's incurring the expense to the person that's approving it to the accountant that's preparing the payment to whomever after that is maybe signing a check or releasing the direct deposit or whatever. There should be a system of compliance all the way along the process to make sure that there's multiple backups to make sure that something is not being missed or something is not being spent in a manner that is inconsistent with the terms of the grant. And then having reporting and analytics platforms. And this really goes back to what I mentioned with the accounting software. The ability to have, all of your accounting records and then be able to have analytics off of those records or reporting off of those records is super, super important. And most accounting software is going to have budget management tools. It's going to have some type of compliance tracking system, and it's going to have reporting and analytics platforms. Like almost all like major software is going to have all of those things. But the compliance one in particular is a lot more. There's a lot more external part of it as I was talking about, right? Then you can have whatever system you want to have, software wise, right? But all along the approval chain, there has to be human beings that are making sure that things are being done in a compliant manner. The next slide. Yeah, so one particular software that really kind of does all of this stuff in general is QuickBooks Online. And QuickBooks Online has a specific feature within it that's called QuickBooks Projects. And this is really, in general, it's intended to be somewhat of like a project management-ish kind of add-in. But specific to nonprofit organizations, it's a fantastic way to be able to track grants within your software, right? And so like what I was talking about before, right? So you have sort of like your umbrella accounting for your organization, right? But within all those expenditures, you have your specific kind of grant, silo of accounting. And that's what QuickBooks Projects allows you to do. So you have a transaction, it's going to be reported in your overall like organizational financial reporting, but then also you're going to be able to track it specifically within QuickBooks Projects. And so it's very easy to find, it's very easy to use, it's very easy to run sort of reports out of. So like it mentions here, it's a feature within QuickBooks Online that allows users to track income, expenses, profitability, whatnot for individual projects or grants, and is particularly useful for organizations that need to monitor the financial performance of specific projects or grants. And before we move to any other slides or anything like that, like I just want to put out as like a disclaimer, like we're not getting paid by QuickBooks. This isn't like supposed to be, it's not intended to be a QuickBooks like promotion or advertisement or anything like that. But the reality is the most commonly used software for small to medium-sized nonprofits is in fact QuickBooks Online. And even inclusive of other software that can be used at sort of that price point, there's no other software that really has a function that is comparable in you know, the ease of use, the efficiency of use, and the amount of training materials that are accessible to QuickBooks projects. And so that's why it's the one that we're going to kind of walk through you know, today. You know, again, just want to make that, you know, put that out there. Um, Right. So the key features of it, right? So you can budget for individual grants. So projects is like it's like its own sort of like section of QuickBooks, right? And so within projects, you can have a whole bunch of different grants, right? You can be running, you know, a multitude of them at a time, and then you can click on each individual one and it'll give you a report for that grant. So let's say, for example, that you have three grants from, I don't know, we'll call it the Department of Sharif, whatever. Okay, you have three different grants from the Department of Sharif. You can run reports on each individual grant by themselves, or you can run, you know, a summarized report on all of the, you know, all of the sort of Department of Sharif, you know, grants or whatever, right? So it can be done in either manner. Obviously, it can track the income and expenses, and again, it can do it on a per individual grant basis, or it can also do it by the funder at a higher level. And it gives you the real-time reporting. Like you'll be able to see a dashboard right in front of you, that's going to kind of tell you sort of like where you are at with each particular grant. And then it has reporting functions where you can just click a button, and you can print reports that are very specific to you know, to that particular grant that you're looking at. And as I indicated, right, there's dashboards, there's all of sort of like the bells and whistles to be able to you know, to track, you know, everything or whatnot related to grants. But the thing that is important to note again is that it's doing it inside of a larger software that's tracking all of these things organizationally, right? So you don't have to have stuff in like two different locations or whatever. It's the same transaction, you know, is being reported at both the organizational level and it's being reported at the you know, individual level for the particular grant that we're talking about. So next slide, Angela. Yeah, and so, you know, again, this is just talking about the benefits, and this is kind of you know, some of the stuff that I was alluding to before. It's streamlined, right? It's a very easy, efficient, streamlined process. It's much better with the financial transparency because again, you don't have stuff like in multiple places, or you don't have to have like an external you know, spreadsheet and then be trying to kind of like reconcile that with your overall organizational accounting or anything like that. It's automated, so it saves you a bunch of time. Um, I didn't think to put it in here, but it also actually is saving you, you know, from a lot of potential human error, right? I mean, if you're just kind of like, you know, typing a bunch of things into an Excel spreadsheet and that's separate from your other accounting or whatever, like there's all kinds of potential for errors to be in there, and really this helps out a lot with making sure that that doesn't happen. You know, it mitigates it. Of course, you're never going to make it zero, you know, 0%, but it mitigates the amount of opportunity there is for errors to creep up. And then, of course, you know, it's going to make your decision making a lot easier because you're going to be able to see everything all in the same format, all in the same location, you know, and stuff like that. Next slide. Yeah, so this is basically what it looks like. So if you've ever logged into or seen QuickBooks Online, this is sort of, I mean, this is a, uh, you know, partial screenshot or whatever of what it looks like. This is the classic QuickBooks. They're currently rolling out a new interface that looks different than this. It's Some organizations are using the new interface, some of them are using this classic interface. But at the end of the day, it's still all going to be in the same place. It's still going to be basically on your left-hand panel. And you just click on projects, right? That's it, right? There's not like a separate login. There's not a separate, you know, way to get into it. There's not not a separate website or anything like that. It's embedded within the QuickBooks Online you know, subscription that you already have. Next. Okay, and so after you've clicked on the projects tab, this is basically what it looks like. you can see at the top, you can do stuff by all projects if you want. You can set up an hourly cost rate. You can, obviously start a new project there in the green, sort of in the top right-hand corner. Um, Underneath the big kind of bolded word projects, you can see down below that you can filter it by those that are in progress. You can filter it by those that are finished, maybe upcoming if you haven't started one. You can filter by all customers, and customers here is basically going to be the grantor. You can filter by all of them if you want to see all of them. You can filter just by specific ones. So, like we talked about, if you have 3 Department of Sharif grants, right, you can filter by just that particular customer. And then by clicking on any one of them, then you can go into the specific grant itself. And so if we go to the next slide. So this is if we clicked, we clicked on one of them or whatever, then we get into the specific grant. So, we would have, for example, the specific grant. So it has, the income that we've received at, up to this point in time. It would have the cost that we have incurred up to this point in time. And then obviously the profit if there is any. Obviously with grants, pretty much at the end of the day, the profit's going to be, oftentimes zero because we're just going to be spending all of the money that we brought in on the terms of the grant. But anyhow, you can, as it shows across the top, you can go into individual transactions. You can check on the time, right? And this can link into your payroll module and timesheets and all of those kind of things. There's project reports, right? So the same kind of reports that you can run for your entire organization, you can also run those reports specific to, in this case, this particular grant. Attachments you can add, whatever. It could be that you're adding in the terms of the grant, could be, different, whatever, receipts, whatever. There's all kinds of things that you can attach. And so as time goes along on the grant, you'll be able to see in the left panel like all the different invoices that have gone out. And on the right panel, you'll be able to see all of the costs that have been occurred up to this point in time. Then we can go into like an individual transaction and kind of show how it all integrates, right? So in this particular case, hey, I'm getting paid, exciting. So anyway, in this particular case, right? So we're going to have the vendor that we're paying, right? Whomever it is that we're paying and all that kind of stuff, that's going to be the same, right? So the category, which is on the left-hand side of the screen, in this particular case, it looks like it's contractors. So you'll have a category that's going to be your natural expense category, right? This is the expense category that you're going to find on your general organizational financial statements. Then on the kind of the far right side, you're still going to be able to classify this particular transaction. So we'll talk about 990s, of course, in the second half of this presentation, but 990s, generally speaking, require you to allocate your expenses among programmatic expenses, administrative expenses, and fundraising expenses. And so we're still able to do that by using class tracking here. And then where it says donor or project, and actually in some places it might say customer instead of that. But anyway, where it says donor or project, that's where you're going to put in the name of the specific grant, right? And then where it says billable and it's checked, what that's going to do is say, okay, we've expended this money, and then later on we're going to invoice, so we're going to want to include this expense, right, as part of the invoicing process. So by clicking billable, it's going to show up, and we'll see it on a different screen in a moment. But that's going to say, yeah, that this particular invoice is one that we're going to or this payment, I guess, is one that we're going to include when we invoice the grantor. And then of course there's a description field, and that description field is pretty important when it comes to the general ledger report that we're going to send as generally backup to the grantors, right? You want that to be as descriptive as possible so that it is in compliance with the terms of the grant. At the bottom of the screen there, there's the place where you can add attachments. So you could attach the invoice that shows all the approvals and all that kind of thing to this, so that within your grant tracking software, if you were to open this up again because you needed an invoice, you can just download that invoice if you didn't, if you couldn't find it or what have you from the particular transaction, right? So if we look at this, right? So this is the whole kind of kit and caboodle of, right, like of accounting software, right? So we have the whole thing here, right? So we're reporting things from the organizational level for that purpose. We're reporting things that are necessary for the 990 with respect to the class tracking. We're describing the transaction both for our general accounting purposes and for the grant accounting purposes. In the donor project, place right there or whatnot, we're able then to allocate or to say that this expense belongs to a particular grant. We're able to click the billable thing there so that we know now that not only does it belong to that grant, but we're going to invoice the grantor later. And then we can attach our invoice that we're paying from or whatever to this. So we have it inside of accounting software. Again, an all-in-one, sort of shop to be able to do everything in one single transaction. Next slide. And so here would be like if we're invoicing someone. So, right. So we're going to invoice, in this particular case, it was a tax credit grant, right? So we're going to invoice this particular grant on the left side. On the right side, you can see that there's two billable expenses. And so every billable expense that has yet to be invoiced is going to show up on that right panel, right? And you can see that, it has notes, which is, probably from the bank feed, and all these kind of things. But you can add it, there's the add button there. And as soon as you add it, it'll move it over now to the invoice. And once you've added it, if you invoice later, you're not going to be able to invoice for the same thing again because it's already been added, right, to to a previous invoice. So it also helps to make sure that you're not doubling up, accidentally adding, the same expenses or whatever to multiple invoices, or anything like that. And so it's just, from the other screen, right, we click the billable, the little billable checkbox. So now it puts it in this, these panes or whatever you want to call it on the far right-hand side. We click it and we add it to the invoice. Now, we want to be, pretty clear, right, that like most grants nowadays, they're going to have like a platform that you're going to go to and you're going to like upload the information there, right? So probably this particular invoice that's created inside of QuickBooks oftentimes is not going to be able to be sent, right, to the grant agency, right? But what it does do is when you receive the payment, then you're able to link it within your accounting system to know, okay, we sent this invoice out and we've linked the payment. And again, in addition to that, it's going to ensure that you're not going to be billing for or invoicing for the same expenses on multiple invoices because you just missed something or whatever. It pretty much eliminates or mitigates the ability to do that. So it's just a really cool kind of simple feature. Next slide. Yeah, and then again, one of the things about QuickBooks and Intuit in general is that because it is so widely used, there are probably billions of videos, websites, written descriptions of how to use like all aspects of their software. There's pretty much no question that you can have that you can't find some type of documentation on how to do it or how to, fix it if it's a problem or how to use something or whatever. These are some great resources here, for, how to create and manage projects, and how to use QuickBooks projects to, to track things. So these are great things. I think you'll have access to these slides and to these links. But trust me, again, right, if there's a question that you have on QuickBooks or QuickBooks projects or anything like that, you're not the first person to have the question. Someone has had it before, and there are tons and tons and tons of resources and how to how to do that particular thing or fix it or whatnot. Next slide. So now we'll move from all of that stuff to grant invoicing. So maybe this is a good time to sort of like stop for a moment and just see if if there's anyone that has any questions, or if there's anything I can clarify up to this point in time. No? Okay. So let's go ahead and move on then to grant invoicing. So, as the slide indicates here, right, grant invoicing involves billing the funding agency for expenses occurred under the grant terms, right? And so it includes what? So you have to prepare detailed invoices with supporting documentation. And so that's the biggest thing, right, is the supporting documentation. The invoices themselves, like most of these granting agencies or whatever, have a particular style of invoice. They have a particular template, and you're going to fill out, right? You're going to generally fill out their template and probably upload it to some electronic portal. But they're for sure going to require that there's the supporting documentation that goes with that. So that's going to be invoices, receipts, timesheets, maybe pay stubs, maybe payroll reports, all of those kind of things. In addition to that, right, oftentimes we will have transactions that are partially, there's items on them that are for a grant, but maybe the entire transaction isn't, right? Like, I don't know, maybe we bought something at Amazon, right? And there's 5 items on the receipt and only 3 of them pertain to the grant. So oftentimes we're going to have to go in and we're going to have to circle things and highlight things and all that kind of stuff to show that, yeah, we're not trying to get reimbursed for things that are not part of the terms of the grant, right? And so it's a lot more detailed than just a regular invoice, right? Regular invoice, you just kind of type it up, you send it, um, and we're kind of done, right? We just wait for the money to sort of show up in the bank. But for grant invoicing, no, we have to make sure that the invoices are detailed in the manner that the funding agency is telling us to do it, right? And that's like the super important thing, right? We don't invoice grant agencies the way we want to invoice them, but we invoice them the way that they want us to invoice them. Um, we've seen, I mean, Angela and I think both have seen many times where people just don't do it in the manner that the grantor wants it and they reject it. It's like, yeah, we're not going to pay it because you didn't do it in the way that we want it. Whether that's the template, whether that's the manner of the documentation, whatever it might happen to be, you want to make sure that you understand how do they want to be invoiced, right? Is there a particular sequence of the receipts that they want? Is there a particular, do they want only PDFs and no other type of file? Is the template itself, does it have to be in a particular format? Whatever it is, right? You want to make sure that the invoices are as detailed as possible. They have the supporting documentation that's necessary, whatever, addendums to that, right? Whether it's, circling things, highlighting them, writing something on the receipt, like whatever is necessary to do that, you want to make sure that all that is done. And it's like so important because again, Angela and I run into these cases where people can't get their money for like 3-4 months at a time because they keep sending, they're like, oh, we're great. We sent the invoice in, we're gonna, it's gonna be raining money here, any time or whatever, and 1 month passes and there's no payment, and 2 months and there's no payment, and 3 months and no payment, only to find out that there was something that was wrong with the invoice, and they just, weren't gonna process it. In addition to that, right? It's of course ensuring compliance with the grantor requirements, right? Because most of these templates, like you got to go through and you got to categorize stuff, and sometimes, right, like you're not sure, oh wait, does this go in this category or that category, right? Okay, and so you're going to have to refer back again to the terms and conditions of the grant. So it also is reinforcing, right, whether or not like, are these expenses even allowable. If they're allowable, sort of like which category do they go in? So there's also part of it where, while you're sort of like going through and invoicing, you're kind of ensuring compliance, and you're kind of educating yourself again, or reinforcing, what the terms and the conditions of the grants are. Obviously, there's tracking payments and receivables, right? Again, the example of the organization that didn't get paid for 3 months. Yeah, they probably, after the first month, should have been thinking, I wonder why it didn't show up in my account. Maybe we should reach out and see what's going on, right? And if they had their accounting software and they were, doing monthly reports, and they're like, hey, they have our organization has, $150,000 in accounts receivable that we haven't gotten. Yeah, then you'd reach out and you'd, make sure that that's the case. But super important to do that as well. And then obviously you got to maintain all your financial records in order to be able to do all of these things. Yeah, and to the individual that said, "Hey, could we get the city and county to have the same template and be on the same system and all that kind of stuff?" Yeah, I wouldn't hold my breath. I think all of these different entities, they're often just sort of like stuck in their system, right? Whatever they have, whatever works for them. They're not looking at any other entity oftentimes to see like what they're doing, right? Like we have our system and this works great for us and it works great for our clients, and so we're going to use this. Yeah, there might be that client might also have another grant from another, entity or whatever, but maybe that's not what works best, for that entity. And so I don't think they're often looking to see like what other grantors are necessarily doing, right? If kind of the whole like if it ain't broke, don't fix it from like their perspective. From your perspective, right? You have two different things and they're in different templates and and all that kind of stuff, and it makes it complicated. But from their perspective, it's just their grant. It's not, all the other ones or whatnot that are in your sort of portfolio.
Yeah, and can I add to that, Sharif?
Yeah.
So for the city and county and state and federal government, whoever you're invoicing, they're probably, like Sharif said, will use their own template. Some things that you might be thinking of to make your life a little bit easier is when you're doing the contract negotiation or the negotiation for your grant, try to see if you can shorten the terms of payment. So typically we see net 30 or later for people to get paid. Some funders will do net 10. And I've seen that with the city of Tacoma. For the Pierce County, we have seen them allow grace to organizations where they can invoice twice a month. So it's important when you're working on cost reimbursable or you're working to get paid to be able to get paid to do the work, especially as a nonprofit. So I do feel like funders are flexible, and you have a voice as the party in the agreement, right? And so if you're getting a grant, they probably couldn't do the project without you. So feel free to reach out to CPIN and we can help you think of like things that could make your life easier. So you're not waiting and waiting and waiting and waiting and waiting. And pretty soon you're like, will the money ever come? Right. And also, it is a binding agreement that they sign with you. And so, make sure they're holding up their end. If they say whatever, then they're supposed to do the whatevers. And the same goes for the nonprofits. If you've agreed to something in writing, hold up your end of the bargain. If you didn't like what you agreed to, make sure you take the time in the negotiation process to try to see if you can get it to read the way you need it to be when you're doing your invoicing or your programmatic delivery. That makes sense. All right. And then sometimes people want you to do invoice and electronic payment. So we see it all over the map with all over with funders. And I feel like, the federal government was trying to do advance payment. I think that's great to get you started, but when you're looking at invoicing, you're getting the money up front a little bit. What you have to do is track how you spent the money, right? And sometimes we are in our human nature, we like to move forward and think about next steps. It's hard to go back and think of what we did yesterday or the month before or the week before. So again, pluses and minuses to different types of, preparing invoices and submitting those and getting paid.
Yeah, and you know, and I mean best practices, and I think we kind of touched on a lot of this, but I mean one of them is, you know, clearly define allowable costs, you know, in the grant agreement. So like Angela's talking about, right? Like the grant doesn't start when you get the money, the grant starts when you're sort of negotiating the terms, right? You know, making sure that, you know, the stuff is defined, it's clear. If there's something specific that, you know, that you're thinking about, you know, that you want as part of that process, you know, try to get that clearly defined, you know, up front, right? I mean, we see other, you know, we see examples where, you know, people maybe didn't even read the fine print, you know, and they're like, oh, well, this is from that category, except that in the grant agreement itself, it excludes that, like that particular expense, right? So make sure that, you know, everything is, the allowable costs are very defined in the grant agreement, and that if there's something specific that you're hoping to purchase as part of this or whatever, that that's included, you know, pretty clearly in, you know, in the contract itself. Obviously maintaining thorough documentation for all the expenses, right? You want to be able to have, if somebody, you know, this is not going to happen, but if someone just came in off the street to audit, you know, your grant expenses or whatever, that you can easily like pull out the documentation, right? You're not having to search for it. You're not really sure, like, oh, maybe it was that invoice, maybe it was this, right? You want to make sure that everything is thoroughly documented, you know, for everything that you're spending, that there's, you know, there's approvals on the you know, on the documentation, that you know, that all of the steps that are necessary to comply with the grant are in place and are clear and are accessible, and are, you know, maybe even more than is necessary. You know, using sort of automated invoicing tools, again, you know, anything that you can do to make sure that you're, you know, that you're mitigating sort of like the human, you know, human error, you know, part of it is what you're, you know, you're going to want to do. So automating any part of the process that you can automate, you know, assuming you can do it efficiently and effectively, and it's not, you know, it's not you know, super expensive and all that, you know, is stuff that you want to do. And regularly reconcile invoices with the payments received, especially, you know, if you have, you know, if you have a particular grant where it's like a similar amount or maybe even the same amount that you're getting every month, like when you get the payment, like make sure, like, is this payment for the June invoice, or was it the March one, or is it the April one? And, you know, and just making sure that then in your software, okay, this is what we said, or what we asked for, this is what we got, okay, this is the month, okay, we're clear on that. So now when I'm running again these receivable reports and stuff like that, I know that I got April. I know that I got June. Oh, wait a second. I didn't get May, right? Because one thing that can happen, especially if it's the same amount every month, right, is you think, for example, oh, I didn't get the June one, but in their records, they sent the June one. So they're going to be like, nope, we sent it. You know, and then what are you going to do? Well, no, I didn't get it. Well, no, you did get it. You didn't get May, right? And so in your records, you know, maybe if you just, you know, applied it to the next invoice, and you didn't actually, you know, reconcile and look at the actual payment or whatever, you might get in a very frustrating situation where you're asking for something that, yes, they didn't give you, but in their records it's different than, you know, than what's in your records. And so you also don't want to run into that. And then, you know, in other cases, in particular, when you have a bunch of different grants, you know, and they might be from the same funder or something like that, like you definitely want to make sure that you're reconciling all those as soon as the payments come in, so that there's nothing that's missing. And again, you were not getting into this like 2 or 3 months down the road and we haven't received a payment for something that we had invoiced. Next.
Yep. And just to add
Oh,
on to that, you know, for your sanity, we do recommend that if there is an option to sign up for receiving payments electronically, that you do that. Because, you know, waiting for a check in the mail could take a while, or the check may not get here again and again and again. So try to automate where you can to save yourself time. I've also seen, if you're working with a funder and you have a couple grants, I have seen sometimes funders bundle payments, because to them, you know, you've invoiced, and to you, you have to split the payment and figure out which goes to which invoice. So the little tips and tricks, I think, that you can kind of lean on CPIN to help you figure out, like, what is the best practice to keep my sanity? because as you grow, there's always more work in the invoicing process, right? And as we've talked about in this conversation, every funder wants it their way, right? They want their fast food burger with this and that and a side of this and whatever else, right? So again, trying to be everything to everyone could make your grant accountant, or if that's you, a little bit crazy. So we're happy to help provide some guidance in that area. And then leaning on this City of Tacoma invoicing process a little bit, they do go through Ariba. So for your city contracts, they're going to say, hey, we set up Ariba for you. And because there might be different nuances in how you invoice, we've included a link to one of their videos that they provided to CPIN as a tutorial, and other grantees as a tutorial as well. So food for thought, your invoicing for the city contracts might be a little bit different, but this gives you a general gist of what you need to prepare. One thing we have learned too, as being a contracted provider with the City of Tacoma, is that once you've uploaded in Ariba, you can't, and submitted it, you can't undo it. So sometimes, you got to make sure the documentation you're uploading or the justification you're uploading is the real thing. Because if you upload something else that may not be related or may not be detailed, it will just stay in your record, right? So they may reject the invoice and ask you to do it again. So just food for thought of things that we've learned as we've tried to make sure that we're also meeting City of Tacoma expectations. Okay, let's go on to the last little bit here. You want to wrap us up on this section, Sharif?
Yeah, I mean, just just as it indicates here, right? So effective grant accounting, using kind of the proper tools. One example of those being QuickBooks projects, making sure that your invoicing practices are good, right? All of that stuff is going to, make sure that you're compliant, you're transparent, and you're successfully managing the funds, which means that funders love you, right? They're going to speak highly of you, and they're going to be willing to give you, sort of more money. And then, bad grant accounting either might mean that you might have to pay some money back. You might not get some money that you had expended funds on. And maybe down the road, another funder will not fund you because of the bad experience that someone else had. So it's super important to do it. Not every bookkeeper, accountant, CPA, whatever you want to, whatever, flavor you have there, knows how to do it. And we've run into this situation, Angela and I, where we've had to come in sort of behind someone that had all the licensing and all that kind of stuff, from the kind of, big umbrella level of accounting, but they did not know how to do sort of the siloed grant accounting, and it was a big problem for some organizations. So that's also just something else that's important to understand, is not everyone knows how to do it, even if they have, particular credentials or or what have you. All right, IRS Form 990. Gotta love the IRS and their numbers. So the 990 is the yeah, so what are 990 forms, right? So these are the informational tax form. It's primarily informational. Yes, there's numbers on it and income and expenses and balance sheets and all those kind of things, but primarily it's an informational tax form, meaning that in general you're not going to be paying tax, you're just sending information to them. Most, I mean, and by most, basically everyone that's not like a religious organization, or, government, most tax exempt organizations must file this every year, right? And it basically gives the IRS an overview of your activities, your governance, and detailed financial information. In essence, the main point of the 990 is that it's going to be publicly disclosed, right? So anyone that wants to know about your organization is going to be able to know your financial situation. It's going to know about your policies and procedures based on the answering of the questions that are in this form. It's going to know the salaries of your top earners, whether that's the executive director, whether that's board members that are getting paid, whether that's, high earning folks that are not the executive director. It's going to know all that information. It's going to know what percentage of your money is being spent on your mission, on the programs of your organization versus how much is being spent on the overhead. All of those kind of things, who the board members are, who they aren't. All of that type of information is being solicited here. There's the three different versions. There's the 990N, which is the note card. Note card is for organizations that have $50,000 or less in a year in revenue. And the note card, you don't need to say anything other than we have less than 50,000. You basically go on, it's like an IRS site or whatever. Hey, we have less than 50,000. We affirm that this is the case, and that's it. There's no, you don't have to provide the amount of expenses or the amount of revenue or the, any kind of categories or whatnot. There's also the 990EZ. As I put here, it's not as easy as you'd think. It's still like about, 6-ish page, tax return. So, I mean, there's still a lot of information. But a lot of the information that's asked in the full 990 is like consolidated. And so instead of like, 20 questions on a particular thing, there's only, 4 or 5. And then we'll talk about who has to file that. And then the longest one is just like the 990 itself. There's also which I didn't put on here, but there's also a 990 PF for private foundations as well. That's it's sort of part of this series, but it's like for slightly different types of organizations. The next slide. Yeah, so like I was alluding to in the other one, like which one do I file, right? So less than 50,000 is the note card. The EZ, there's kind of two tests, right? So if your gross income is, between 50 and 200,000, or your total assets are less than, I'm sorry, and your total assets are less than 500,000, then you would file the EZ, right? So if you have, 201, I think it's actually 200,000 exactly. If you have 200,000, but we'll just call it $200,001 in revenue, it's too much. You can't file the EZ. If you have 199,000, but you have, $500,001 in total assets, also you cannot file the EZ. So you have to fulfill both of these, less than the 500,000 and less than the 200,000. And then if you don't, if you're above all that, then you have to file the full 990. The biggest difference, other than the number of questions that you have to answer, is the financial information that's required. The full 990 has the statement of functional expenses, where you must allocate every expense between program, administrative, it's management in general is what it's called on the form, and fundraising. You also have to have a full balance sheet, a full revenue statement, and there's other schedules that wouldn't be required on the EZ that are required on the 990. But it is a much more robust return. And if you're an organization that's kind of been towing the line and have been able to file the EZ, and now you're moving up to the full 990, hopefully you were tracking your functional expenses in preparation for making it to the 990. When I prepare these, I see organizations all over the place that do not do that, and it is a requirement that you are able to allocate the expenses among those three classifications. Next slide. All right, so it is due the 15th day of the 5th month after the end of your fiscal year, right? So that's fun way that they do it. But basically, if you're on a calendar year, it's due May 15th. And then you can extend it to December 15th. I'm sorry, November 15th, right? So most people are on a calendar year, though not all, right? Their 990 is due May 15th, and then you can file an extension, no questions asked extension that would extend it to November 15th. And then, for each month of the year that your fiscal year would end, then that changes. Jennifer, you have a question?
Yeah, can we go back to that one slide about the 990? I just want to make sure I understand.
Yeah.
So if you make more than 50,000, but you have less than 500,000, are you saying you then have to do a 990 rather than a 990N?
No, so there's two different thresholds. So one of them is the revenue threshold or income. So your
Correct.
income has to be under 200,000, and your total assets have to be under 500,000. So if either one of those are not met, right? If your income is 200,000 or more, or your assets are 500,000 or more, then you would have to file the full 990.
Okay, thank you.
Mhm. Yeah, so what I was saying then about the return is that, we can just start with that, right? If you're a calendar provider, it's due in May, right? And then you can just go from there, right? January is going to be due in June, February is going to be due in July, so on and so forth. And then again, there's the 6-month no questions asked extension, that as long as you file it on the due date, on the original due date or before, it will be accepted. Super important though, the late filing fee is a lot. Okay, it's $20 per day with a maximum penalty of the lesser of 10,500 or 5,000 of your gross receipts. So I've seen this a lot, right? Younger organizations in particular file it late and get some pretty significant penalties, because younger organizations, they don't have a lot of money, right? So you get a $6, $7, $8, $9, $10,000 penalty. It's a pretty huge deal. Sometimes organizations are late 2 years in a row, and so the penalty is, 20,000 plus. And it's the IRS. Like, it's not just the penalty, right? Like, you're going to get interest, you're going to get like all kinds of things, that are going to be tacked on. So for sure, you want to make sure that it's filed by the due date. If you can't hit that, extend it, and make sure that it's filed by then the new due date. Has to be electronically filed. There's no exceptions. They will not accept paper files at all. Paper filing of it, 0. Cannot do it. They will not even acknowledge that they received it. If you do not file it for 3 consecutive years, then you get what's called auto revocation. Your nonprofit status is automatically revoked. I just was working with an organization. They asked me to do their 990 for this year. They had not filed it by the May 15th deadline. They gave me the information. I went to look up, and they had not filed. This was the 3rd year. They had not filed it for 3 years, and so they lost their nonprofit status. What does that mean? It means you got to start over from scratch. You have to go back again and start as if you were not a nonprofit at all. And in certain cases, there will be a gap under which you were not a nonprofit, right? So let's say that you were auto revoked, May 15th of this year, and then you didn't get your status back until November. Well, between that period of time, you're not a nonprofit, so you're subject to tax. You're subject to, people can't deduct the donations they give to you. I mean, so there's a lot of things that that can go into that. So 3 years in a row, and you will lose your status. So you must file it, even if it's wrong, even if it's materially wrong, but you just don't have time. File it anyway, and then just amend it later. But make sure that it gets filed on time, particularly if you haven't done it for a couple of years. Next slide. Oh, there you go. Thank you so much for joining us today.